I've been getting a lot of questions about GameStop, so this week, let's just talk about GameStop. Hello everyone, it's Professor D. Lee with answers to your most pressing GameStop questions. Before I get into it, I'm not giving investment advice in this video. I'm just giving a quick recap of what's been going on with GameStop shares. So please do not take this information and think that you can make money off of it. GameStop is a brick and mortar store. As far as I know, they buy and sell games and game consoles. And so I imagine something like Blockbuster. Lots of hedge funds have been betting against this company, thinking that it would go bankrupt like Blockbuster. But in June of 2019, on a Reddit forum called Wall Street Bets, somebody value starts buying long call, posts this, saying that he's betting that the stock will go up by January of 2021. And shares are trading at less than $10 per share at this time. A couple months later, Michael Burry, who is best known as a guy from the movie Big Short, says that 90% of GameStop stores are actually cash flow positive. So they're making a profit. He says they're doing fine. And that if you look at the financials, that the GameStop shares are being traded at a deep discount. So there's value in the company. And so he basically buys 3% of the company. And shares at this point are trading at less than $5 per share. And so this is what we would call a fundamentally driven trade. 1 year later, Ryan Cohen, who's a founder of Chewy.com that was sold for billions to PetSmart, takes a 10% position in GameStop, basically buys 10% of the company. Shares are trading at less than $10. And then somebody on the Reddit forum, Wall Street Bets, notes that there's 120% short interest in GameStop. That means that if there are 100 shares of GameStop, for example, there's a bet against 120 shares, which makes no sense, I know, but it just goes to show that there's too many people betting that the company will basically go bankrupt or the share price will go down in the future. And he or she, I guess, says that there's actually a lot going for GameStop right now, and says that if the price goes up, the share price goes up, that these hedge funds will be forced to basically take back their bet that GameStop will go down in the future by buying shares of GameStop. That's how you take back that bet, which will cause the shares of GameStop to go up even higher. And that's called a short squeeze. And I'll come back to that in a second. In November of 2020, Ryan Cohen, again, talks about the future of GameStop and shares his thoughts on how GameStop can become a digital company and actually thrive in the future. And then in January 2021, again, Ryan Cohen, he joins the board of GameStop along with two of his colleagues. And retail investors think that's a great move. The price of GameStop goes up by 13%, and now it's trading at $20 per share. Recall it's trading at $10 or less. Over the next 2 days, there's a ton of activity on Wall Street Bets, along with many other forums talking about GameStop, on how Ryan Cohen will be the savior of GameStop. And by the 14th of January, GameStop is trading at $40 per share. This sets up the epic battle between the hedge funds and the retail investors. Recall, retail investors were betting that the price of shares, GameStop, will go up. Hedge funds were betting that it was going to go down. It went up like the retail investors had predicted. The hedge funds are losing money, billions of dollars of money. They're being squeezed. Now they are having to cover their bets by buying shares of GameStop, which causes the price of GameStop to go even higher. The price of GameStop keeps on going up, which catches the attention of quant and momentum-driven traders who gets in on the party, and they start buying shares of GameStop, which causes the price of GameStop to go even higher. And so over the next few days, by January 20th, 21, 22, GameStop shares goes up by 70%, which sets up a gamma squeeze. Now, what is a gamma squeeze? Retail investors were not only buying shares of GameStop, which drove the price of the shares up, they're buying what are called call options, which is basically a bet that the share price of GameStop will go up without actually buying shares of GameStop. And when somebody buys call options, these call options, whoever is selling it has to take an opposite position to hedge that bet. Robinhood has been in the news a lot, but to be fair, it's not just Robinhood. It's basically anybody else has to do the same thing. And so if you can imagine, all these retail investors are buying call options. Let's just use Robinhood, forcing Robinhood to take the opposite position. So they have to bet that the price of GameStop will go down, but the price of GameStop keeps on going up, which makes Robinhood lose money. They have to cover their bet, just like the hedge funds had to, by buying shares of GameStop, which increases the price of GameStop even more. So there's a short squeeze going on, there's a gamma squeeze going on, there's an epic battle between the hedge funds and the retail investors. Quantum, momentum-driven traders are here getting in on the fun. Custodians like Robinhood are kind of caught in the middle. They don't know what to do. It's probably something that nobody has ever seen before happen. Hedge funds are losing billions of dollars. Melvin Capital in particular had to get an injection of $3 billion just to avoid basically going bankrupt. And not only is this having an effect on GameStop shares and these hedge funds, but these hedge funds had to sell a bunch of their other investments to get enough cash to shore up, to cover their losses on GameStop. Just as an example, I don't know if this is the exact company, but let's say they had to sell $1 billion of Facebook shares. That drives down the price of Facebook shares. So basically, that's what's happened with GameStop shares. You might have friends that made a ton of money on GameStop shares and now you're feeling some FOMO. If you'd like to get in on the fun, my warning is that this is a very dangerous gamble. This isn't even investing. This is just a gamble. I have no idea what's going to happen in the future. I have a feeling that this is not going to end well. Many people are going to lose money and many people are going to end up getting hurt. Charlie Munger once said, "Someone will always be getting richer faster than you." Charlie Munger is right. From my experience as a wealth manager, somebody's always getting richer faster. And if you're having FOMO and you try to chase those get rich quick happenings, that's a very dangerous path to take, where the likelihood is that won't happen, that won't end very well for you. There is something to be said about value investing, in that studies have shown value stocks have actually tended to outperform the opposite of value stocks, which are called growth stocks. If you're interested in value investing, I would do some research on that and construct a portfolio where it's tilted towards value stocks so that you can participate, maybe not in deep value, but a regular value stock that's not as risky as, say, a GameStop. For those of you that participated in this meteoric rise in GameStop shares, I'm not going to give any advice since I don't know what's going to happen in the future, but I will give you this one quote by Mark Cuban, who said, "You only have to get rich once." If you like this video, make sure you like and subscribe, and to follow me on Twitter and Instagram. Next week, hopefully, I'll be back with some educational content.